You've been searching for the best way to generate passive income in your life and heard that real estate is a great way to do it. But you're tired of all the so-called gurus who are all talk and no substance. Get ready to celebrate because Kevin Bupp has spent 14 years successfully making it happen. This is the Real Estate Investing for Cash Flow podcast. Now, here's Kevin Bupp.
Hey guys, Kevin Bupp here. I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast, where our mission is to help you build and maintain massive amounts of cash flow through income-producing real estate investments. Our guest for this week's show is family office expert, fellow podcaster, and CEO of the Miami Family Office, Richard Wilson. Richard is the founder of the Wilson Holding Company, which produces $10 million annually in revenue through various operating businesses, including the Billionaire Family Office and the Family Club, which is the world's largest membership-based family office association. In addition to these associations, the Wilson Holding Company also has ownership interest in training, single-family office management, investment conferences, data research, private equity, food, and energy industries. Aside from his direct business endeavors, Richard has also spoken at more than 150 conferences in 17 countries and has the #1 best-selling book in the family office industry. And so in today's show, we're going to be covering a variety of topics with Richard. Some of those including, just generally speaking, what a family office is for those that don't know, how we real estate investors can tap into the worldwide family office network as a potential source of funding for our deals and potential strategic partnerships or relationships to ultimately help grow our business. What types of investments are family offices seeking? How to appropriately approach a family office with an investment opportunity. We're going to discuss the 3 trust curves needed for deals to get done with the family offices and much, much more. And so, guys, with that, I'm excited to get on our call with Richard. But before we do, here's a quick word from our show sponsor, Sunrise Capital Investors. Hey guys, Kevin Bupp here with Sunrise Capital Investors. As you are hopefully already well aware, if you've been a listener for any period of time, my goal has always been to provide you with as much value as I possibly can through my 2 podcasts, Real Estate Investing for Cash Flow and the Mobile Home Park Investing Podcast. As our audience continues to grow, literally, we've been downloaded millions of times by folks in over 125 countries. I've had thousands of people reach out looking to get involved in our niche. And that's the phenomenal niche of mobile home park investing. For those that don't know, I've been a full-time real estate investor for nearly 20 years now, and I've personally invested in and have owned apartment complexes, various commercial properties, hundreds of single-family rentals, and I've interviewed some of the most successful investors in just about every other asset class, and I've arrived at this one very simple conclusion. Mobile home parks are hands down the best investment I've found to date. Why? They provide investors with the best risk-adjusted returns out of any other real estate sector that I've seen. Investing in real estate can get complicated, and I really want to simplify this process for you. If you're someone who wants to diversify away from the uncertainty of Wall Street and allocate a percentage of your real estate portfolio to mobile home parks, but maybe you don't have the time nor the inclination to personally locate good deals yourself, then our team will do it for you. At Sunrise Capital Investors, our team specializes in the acquisitions and management of undervalued and highly profitable mobile home parks. And we are now providing accredited investors with an opportunity to participate directly alongside our team in our up-and-coming deals. And let me say this, I believe that we are hands down the best in our space at sourcing highly profitable off-market deals. That's really what makes us unique in this niche and as investment managers. As stewards of your capital, we truly are aligned with our investors. We've structured our investment fund so that we as a company are incentivized in the same way the investor is, which is through the performance of the investment itself. In addition, we want to make sure that we not only make money for our investors, but that they understand how it's being made. That's why we provide our accredited partners with a private monthly podcast that walks them through the detailed updates on how their investment is performing. And we're very transparent, providing you with the good, the bad, and the ugly at times. And so if you'd like to learn more about the partnership opportunities with our team here at Sunrise, please go visit sunrisecapitalinvestors.com and click on the investors link to get signed up. It's absolutely free and you'll get placed on the priority list of when new opportunities come along. Also, feel free to call us at 833-CASH-FLOW without the O. Again, that's 833-CASH-FLOW without the O. And one of our investor relations team members will help you schedule an appointment to speak with one of our managing principals. If you have questions, go ahead and schedule a call and let's get on the phone and talk. And with that, guys, I like to leave with one last thought. From the time that I wake up in the morning till the time that I lay my head down the rest of the evening, my number one priority with everything I do, whether it be recording this podcast, working for our investors, helping each of you reach your investment goals, to providing a great experience to each of our residents who reside in our communities, is to add huge amounts of value to everyone that I come in contact with. Now, with that being said, I look forward to the opportunity of bringing value to you through Sunrise and through this podcast. Thank you for your time. Now, let's go ahead and get back to the show. All right, guys, without further ado, I'd like to welcome our guest for today's show, Richard Wilson. Richard, how you doing today, my friend?
Great. Thanks for having me on here.
Yeah, thanks for joining us again. This is a follow-up conversation that we had. I think you were on the show a couple years back. So I'm sure a lot has changed. I know that you've been steadily growing your business and jet-setting across the world, it sounds like, traveling to these different conferences. You've got a lot of irons in the fire and just are a busy man. So excited to have you back on here. Appreciate you taking the time out of your day to jump on a call with us here. So what I'd love to do, Richard, for those folks, being that it's been a couple of years, for those folks that maybe hadn't had the chance to listen to the first show that we did together and maybe haven't heard about you or don't know anything about you, and also don't know too much about what a family office is, maybe take a few minutes, give us the brief background on yourself, and then also maybe give us a little bit of input on exactly what a family office is.
Yeah, sure. So essentially 11 years ago, I started the Family Office Club, and the whole goal is just to create a platform where we're just helping the whole industry be more efficient. So those who are raising capital shouldn't have such a hard time figuring out how to connect with and talk to and pitch and close ultra wealthy investors. And then those that are ultra wealthy have a very hard time getting really high quality deal flow or cash flowing real estate or debt investments with great collateral. So helping them get better deal flow and learn from each other as peers, since they're traditionally pretty secretive groups, is how the whole platform works. And so the Family Office Club just produces a lot of thought leadership, content like this podcast, books, etc. And we try to be helpful to people on both sides of the fence who are raising capital or allocating capital. And I've got about 16 professionals on our core team, and we're based here on the island of Key Biscayne near Miami. And we host 20 live events a year, and they're all investor summits or investor relations training workshops.
Wow, fantastic. 20 a year. I don't know how you find the time.
Lots of help.
Yeah, no, fantastic. Great team, right? That's really what it comes down to, is actually having a great team by your side. I want to chat about that a little bit, about family offices, about your company at familyoffices.com, which is the domain that you'd purchased. And I don't want to digress too much away from the show here, but this is a big part of your business and what you've built here over the years. Talk to me a little bit about how you and your company and your organization have benefited from the building out of everything that is encompassed underneath familyoffices.com. Because, I mean, you really are, you're the thought leader in the space. I mean, like if you go to Google and type in family offices, just in general, if you just type in that term, Richard Wilson is the person that you find first and foremost. So talk to me a little bit about that and how that's benefited your company.
Right. Well, the reason we use it is we try to look at our business as the same way that Coca-Cola would try to dominate distribution. They go to known distribution centers like a movie theater, Costco, grocery stores, gas stations, Disney World. For us, that's looking at known distribution places where ultra wealthy and those raising capital would look for information on family offices. So iTunes for podcasts, Amazon for books, Google for articles and information, YouTube, Twitter, etc. And we go to the known distribution places, and then we try to create new distribution points, just like Coca-Cola, start selling energy drinks within a skateboard clothing or surf clothing store, or they might sell a coconut water now within an Equinox gym, where in the past they had no distribution there. So we look at that and we kind of map that out visually and want to make sure that we are number one in the family office niche globally for each of the known distribution points, and then try to get creative on new ones. And so when you think about family offices, we just want it to be really easy to find us. And when you get an email from someone at familyoffices.com, you know that we're not a newcomer to the industry, you know that we're focused on the industry, it communicates a lot of things subconsciously and consciously that we are one of the leaders in the space. And it also means you are in the right place if you are looking for information just on family offices. Because if you go to a wealth management related website, that some of it might be on family offices, but not all of it. And I think it's a big point I've found that when somebody has a pain in their knee, they want a pill that's going to solve knee pain. When they have a migraine, they want Excedrin. They don't want a blue vitamin. And so when someone is looking to start a family office, that's why we wrote a book called How to Start a Family Office. Deadly simple, but we just hit them between the eyes with something that is the knee pain medicine. And I think that's behind why we got the domain name, and just something that's consistent in everything we do.
And how long have you actually had that domain, Richard?
Only for about 8 years now. And we've bought privateequity.com, for as much as $140,000. We've bought capitalraising.com. We got that one for, I think, $10,000, 7 or 8 years ago. And we've gotten endowments.com, et cetera. So we've done it many times over with different niche areas, and it's not needed. You can have horrible marketing, horrible brand name, a horrible logo, and raise hundreds of millions of dollars.
Sure.
But, it just makes things easier if it's sweating for you versus just sitting there.
No, I love it. Really, where I wanted to go with that is this, for everyone that's listening, is the ability that's out there for anyone to really create a niche in their space, whatever that space is. For us, it's mobile home parks, right? For Richard, it's family offices. And there's the ability to take what Richard just spoke about there and really turn yourself into the thought leader in your particular niche. And it actually doesn't even matter if there's someone else out there already doing it. Figure out how to do it better. In any event, it sounds like, Richard, in your space, there wasn't really anyone. It was very fragmented. There wasn't really a one go-to resource. And so you filled a void that was quite a huge gap at that point. So a great opportunity for you. You saw it, you took advantage of it, and now reaping the benefits and rewards, and also helping a lot of people. Really, it's what it comes down to. It's a win-win because you guys are benefiting, but you're also helping tens of thousands of others that are seeking for information in the family office space. So fantastic. So what I'd love to hear from you, Richard, is, generally speaking, how can we real estate investors? I mean, the folks that listen to this show are involved in all the different aspects of commercial real estate investing, whether they are in the retail sector, the office sector, multifamily, us being mobile home parks. How can we real estate investors that are out there looking for capital, looking for potential joint venture partners, how can we tap into this worldwide network of family offices across the country that are out there seeking what we have, things like what we have, investment opportunities, good deal flow? How do we take advantage of that?
Well, I think one thing to realize is that family offices are sometimes secretive and can feel like they're hard to find, but they're also all around us. They own the sports teams you root for. They back the politicians that you maybe voted against. They own the businesses and the pieces of real estate that you might be inside of right now while listening to this. So in a way, they're all around us, but they also can feel like they're nowhere when you're trying to make inroads. And so every city has family offices and ultra wealthy investors. And you need to figure out, based on your memberships to clubs and where you went to school and where you live and what your local community is like, where those family offices reside, physically live, where they go to work, what organizations are they members of, and just find the natural inroads to where you could create new relationships naturally with them, and it will help you make progress on that. So one example is that I lived in Oregon for 6 years while running the family office club, but I realized the only time I was meeting family offices is after I got on an airplane. So I relocated to one of the most expensive places in the United States, which is an island that's connected to downtown Miami by a bridge, but it's an island near Fisher Island, and it's called Key Biscayne. And there's about 10,000 people that live here, and the oldest military homes from the 1960s that are pretty much tear downs, start at $1.6, $1.7 million. But being here, just at my 4-year-old's birthday party last weekend, there were more family offices there at the barbecue than I met the whole 6 years that I lived in Oregon. So in Oregon, my cost of living would have never paid for itself through positive business, not to mention taxes and weather are pretty depressing. But here in Florida, in the right communities, you can not only enjoy yourself more and pay less taxes, but you just naturally, without even having to try, you meet a family office by going to the park, or you go on a run with one, or your kids are at school together. So if you can find 5 to 7 different communities, things you enjoy doing, whether it's a tennis club, yacht club, golf club, philanthropic group, a YPO, or a tiger group, or different communities locally, are fun things to do that are segmented by those that are very successful or business owners, then that can be a way to kind of naturally immerse yourself with family office type clients.
Okay. How about for those family offices that are more out in the limelight? I mean, is there an actual directory of family offices, for those that aren't? I know there's probably a couple different segments. I mean, there's the family offices that are a little bit more under the radar, right? I mean, they're not part of a directory. The only way you're going to meet those folks is by going to the yacht club, going to different social events and networking. But I'm also assuming that there's probably more mainstream family offices that are putting their names out there, that are putting their information out there for those that are seeking it can find it. I mean, is there a directory like that?
Yeah, there is. We have one at familyofficedatabases.com. We also have the top 100 family offices globally available for free for charter members within the Family Office Club. But lots of times when the mention of databases comes up, it can be helpful because it can get you inroads. If you're going to Chicago, you might be able to set up a couple extra meetings. If you're going to an event, you might be able to look up and see if they're in the database you have, so you can reach out to them before you see them speak at the event to have breakfast or coffee. But importantly, it's why we have, our free book on capital raising. And that's another example of what you mentioned before, capitalraising.com. We have a free book on capital raising, and we just give away a lot of free information on YouTube, et cetera, because the more we give away for free, the more helpful we can be. And just the contact details alone is not enough. Like, for example, we had one person that purchased a database of investors from us, and they said, "Oh, I'm disappointed because I reached out to 30 of them and I didn't get a response." He was kind of putting the pressure on us as if it was our responsibility for him to get a response. I was like, all we can do is find accurate data. We can't control what you say, how often you say it, who you are, where you email them from, how good your deals are. And you have to realize that a lot of family offices get pitched a lot of things. And so you need to go to ones that know you, know the market, know the deal, or work relationships locally until they do know you and trust you, or think about what's going to maximize your chance of getting a response. And oftentimes it is, I'm in your city, meeting with a couple other family offices while on this trip, or I'm local to you, and I'd like to just come by for 5 or 10 minutes, introduce myself, drop off a one-pager, just so you're aware of who we are and just get to know you over time. And, if you can do that or add value first before asking for anything,
sure,
then that's a way to get people's attention, because everyone else is lazy and wants to just email 100 people in a BCC and hope that 4 reply and invest in their deal.
Let's talk about that a little bit. Adding value. I completely agree, right? I mean, if you can't just go out into this world asking me, give me something for free, right? How can someone like myself, Richard, or the other folks that are listening in, how can they provide value to a family office before asking for anything in return?
Many ways. You could connect them with their peers. You could point out different best practices. If they've looked at investing in multifamily or mobile home parks, you've probably learned things the hard way, and you can just share that and wear it on the sleeve and say, here are the top 4 ways I've lost money by doing mobile home park deals. Or here are the 4 lessons I've learned while getting debt in place from banks. Or here are the 5 clauses to make sure you negotiate when putting debt on any piece of real estate investment. And by sharing the expertise along the way that you're learning and kind of documenting your journey, you can add genuine value, and that can get you inroads. But also, even if it didn't get you inroads, it just builds great credibility, so that when you do meet with someone, and maybe it's a little bit cold of a meeting, you can leave with them a little bit of literature or best practices, or you can lead with that at the beginning of the meeting, so that if you sit down and you slap a book on the table called Mobile Home Park Investing, what I've learned through my first 50 deals closed, you instantly have massive credibility versus the guy comes in and then puts a one-pager or a pitch deck on the table and just tries to sell them. So how you add value will be unique to your DNA, your skill set, your background. But some go-to methods would be to think about what their top headaches are and try to provide remedies for their top headaches, connecting them to peers, best practices, or sharing your journey along the way if they care at all about investing in your niche.
Fantastic. That's all great advice. Now, I know that we had briefly discussed it before we got onto this call, Richard, about the need to build trust. And you've spent a lot of time doing research on the needs of family offices, the needs of their clients. And what you've determined is that what you identified is that there's 3 trust curves that are needed to get a deal done with a family office. So I want to talk about those because, really trust is the foundation of any relationship. You might have a great deal to you. It might be a phenomenal deal. It might be in a great market. You've got the expertise and a track record to get it done. There might be a family office that's looking for a very similar type of deal. But if you can't build trust and actually tie that relationship together, then there's a good chance it's probably not going to happen, right? You're not going to end up doing business together. So let's talk about those 3 trust curves and how they apply to building a ongoing high quality relationship with a family office.
Yeah, for sure. The 3 trust curves are: 1 is the team or the individual who's running the organization. The second is the industry overall or the ecosystem surrounding your deal. And the third is the exact deal that you're putting in front of them, the warehouse you're buying, the mobile home park, the apartment building. And so what typically happens is people start out, they raise their first fund or bit of capital, and they do so by going to friends and family and people that have known them a very long time. So that would be people who already trust you as the leader or your team very well. And you're so far up that trust curve that maybe they don't even know what a mobile home park is, but they were your roommate back in college and you watch football every Sunday. So they're pretty much saying yes to what you put in front of them as long as it looks reasonable at all. But after you get past that, people are going out to investors they sort of know or were a referral, or maybe they don't know at all and it's a pretty cold lead. And for those investors to say yes, they need to be up the curve on trusting you and your team, the industry, and the opportunity. So examples of this playing out would be that if you're based in San Diego, but you're purchasing a property in New York, it might be challenging for them to get to know you and your team because of all the travel back and forth. But if you're going to investors that are based in New York and they can go and do due diligence on that property, that would make that a little bit easier. And if those same investors had already invested in multifamily or in mobile home parks and they were familiar with both the industry and they could easily due diligence the asset, then they might be able to get over the pain of the fact that you're halfway, you're all the way across the country.
Mm-hmm.
Or meanwhile, if an investor is based in Denver, the deal's in New York and you're in San Diego and that investor has never invested in your industry before, good luck. Because it's going to be hard to meet with them. They don't know the industry super well because they've never invested in it and they can't travel to the asset to actually see the dang thing and see if it's real or if they believe that it's a good investment. So all 3 curves have a huge challenge. The other example I'll give is that if you're trying to acquire a building, let's say in Austin, Texas, and maybe you're buying it from a seller who has held onto it for 15, 20 years. Maybe that seller wants to leave 10 or 20% of capital in the deal. That investor is easily sold because they know that asset so well. They're actually the current owner of it. So obviously they know it better than anyone could. They obviously know the industry well because they're literally invested in it today. Even though they don't know you, they might have so much trust in those other 2 curves. You just have to focus on getting them to know you just well enough to get to the yes. So with different people, you have to kind of think as you go into meetings, where are they on what trust curve and how can I help them move along it in a natural way that just builds a long-term relationship?
Very interesting. I want to talk a little bit about the needs and wants of the different family offices that are out there. I'm assuming, and correct me if I'm wrong, that the investment profiles, they run the gamut of all the different asset classes of real estate, right? So we're not just talking that there's family offices out there that only do office, that only do retail, that only do multifamily. I'm assuming that there's quite a diverse nature of assets that some of these larger family offices have underneath their investment profile. And so how would we find out, being an investor, how would we find out what exactly the appetite is for a particular family office? Is it just a matter of picking up a phone and making a call and finding out exactly what that family office might be looking for, like kind of what their appetite is for that given month or year, or just overall?
There's some things that come in waves. If we're late in the real estate cycle, in general, families can be a little bit more scared of going into new construction type things. In general, families are typically open to very well collateralized kind of debt investments as long as the debt note pays enough. Many times there's really strong collateral behind a project, but an investor might still get 8 to 12% as a return on their debt note. So those things are kind of steady and true. And then cash flowing assets that are providing, an 8 to 12% coupon, those are hard to find these days, but those are consistently pretty popular among family offices. But otherwise, there's great variety, within the investor set, where there's tens of thousands of investors, in a region, and there's going to be a full spectrum of desires and risk preferences based on where their money came from and what their investment sophistication level is and their history of investing, et cetera. So for sure, you need to get to know the investor as an individual and as a firm. And you can often find things about them through their website or LinkedIn profile. At our Family Office Club investor summits, we make a point of, at each one of our investor summits, we have around 30 investors on stage and then more in the audience. And we ask them on stage, what are you investing in right now? How do people get access to you? What's your strike zone? What's your investment mandate right now? We just like to kind of tease that out of them because we record all these events. We put it in our member portal. And it's one of the things we're trying to do to make the industry more efficient by interviewing investors on this podcast and at the events, because it is very challenging. And there is no database globally. I've been in that business for a decade, and there's no database globally that tracks what different family offices want, because they're very private. A lot of them don't have websites. Almost none of them talk to the press. They're not going to answer the phone to tell some database guy who's making $10 an hour what they're investing in this quarter versus last quarter. They don't think that's like a good use of their time. They typically don't answer the phone at all unless you know them or you've written them a very concise email that gets their attention. So that would be my answer there.
Would there be a benefit of the different conferences that you put on? I know you have a variety. Are any of those geared more towards actually making a connection between some? I know you just mentioned the particular conference where you get a couple of the different family offices up on the stage and kind of get an idea, try to pull out of them, what exactly it is that they're looking for. Are these good conferences for folks like myself to attend? Investors that are actually out there, deal sponsors that are out there in the hunt, in the trenches, doing deals on a regular basis?
Yeah, for sure. We've got our Family Office Real Estate Investor Summit, coming up in New York, September 21st. We have our Family Office Super Summit, which is our 1,000 person event coming up in Miami, December 10th and 11th. And we've got 23 events planned over the next 14, 15 months here. So, every month we're pretty much putting on an event, and we do a lot of deal flow events. So the only family offices that show up are the ones looking for deals. And then people that show up with deals are looking for capital for. But I think a lot of people mistake a few things when they come to the events or look at the events. One mistake is they'll stay out by the coffee bar and just network all day. And they're just like trying so hard to network. But on stage is where the investor is saying, here's how to get access to people just like me. Here's how to get access to me. Here's what I want to invest in. And they miss a lot of the investors saying exactly what they want. So all people come up to me during the cocktail hour and say, do you know any family offices here that invest in private equity? I'm having a hard time finding them. And I said, well, yeah, I don't know if you missed the whole conference, but we had like 12 of them on stage saying that they want private equity investments. So, and they're like, oh, I've been networking, et cetera. And then the other thing is that there is connections between peers, where there might be someone else in the audience that can help you source deals or raise capital. And then there's also just the learning from the investors. So in a single day, hearing from 23 or 27 or 30 investors on how to pitch them, how to get access to them via their email inbox, what gets them to respond, how to summarize what you do in 15 seconds, like what gets their attention right now, what's unique, what fees are they paying, what structures they prefer. It's like a fire hose of content within one day that I really don't think there's anywhere else where you can get, that much insight from investors in a day of invested time. And I think people miss that as well sometimes. They're so concerned chasing the check that they need to close in 10 weeks or something on their deal that, anything else they're kind of distracted by because they're in this kind of stressed out rush around mode. And to be effective, counterintuitively, you need to do things in the family office industry that show you're in it for the long term and that you're playing the long game. And the more you show that, the more that you'll actually be effective at meeting your short-term goals, I think.
That's great advice. Well, it's funny you mention it because I think that the person you described that stands up by the coffee bar, that's probably how most people are trained, right? When they go to a conference like that, is to network, shake as many hands as possible and have as many conversations as possible. Because a lot of times the content that's being presented on stage is kind of filler or fluffer, it's not of the highest quality. Whereas it sounds like your conferences are complete opposite. You kind of need to do both. You need to pay attention to who's speaking on stage, but also work your way into networking opportunities while not missing the great information that's being presented. So,
right. Yeah, exactly. And I would say that maybe 5 emails or 7 emails to very carefully selected people that you might have only shaken a quick hand with, half of them, could be more effective than running around and trying to get cards from 20 or 30 people who may or may not have an interest in what you're doing, and that you don't know how to get access to them and you don't know what they care about. They're much less likely to respond. You'll get more replies by being a little bit more focused and careful rather than kind of trying to connect with everybody, I think.
Generally speaking, what is the typical amount of capital that a smaller family office might be looking to deploy to just kind of stick their toe in the water with the new partnership? I mean, we're not talking a few hundreds of thousands of dollars here. So, I mean, it's probably not the best fit for some smaller investors that may be just getting their start in multifamily or commercial real estate that need to raise $500,000. I mean, is that a fair statement that I make there?
I mean, I've got some friends that are worth 15 million, 30 million, 50 million, and they'd start stuff out at 100,000 up to 1 million. Some family offices that are worth over 100 million, but maybe under 500 million, will still start out test accounts at 200 to 500K, but they'll look to grow those to 3 to 5 million or more. And then some of the larger families just have internal rules. They just don't want to waste their time on things that are not $10 million, $20 million investment opportunities. So those are like general guidelines for how most people look at their portfolio. Like I got a call from a family in Vancouver, and they have $3 billion in liquid capital right now. And he said, like, there's no way I can spend time on anything that's less than $15 to $20 million, or I'll just grow old and die before I allocate all this capital.
Sure.
The family's expecting me to put this capital to work. So they have to look at bigger things. But if you can move way up one of those trust curves and it's in the niche the family knows very well, or they very much believe in it, or they very much believe in you, they might be able to work into a position like that. So start small, grow with you, and build into that allocation.
Well, I'm glad I asked that question because in my mind, Richard, was the $5 or $10 million mark was kind of like the starting point for most family offices. So I'm very glad that I asked that question because I definitely was under the wrong impression of what that minimum might look like.
Well, there's family offices of all sizes too. There's $30 to $50 million family acts a lot different than the $5 billion group. And nowadays there's a lot of people that are worth under 100 million that like to have a really leanly structured single family office or kind of virtual family office setup. And we've helped set up several of those for investors, and those types are the ones that are good kind of bridge investors to get into the family office space sometimes.
Okay. To be respectful of your time, I know we've only got a few minutes left here, Richard, but I want to talk about your website and the resources that you offer and how they might benefit the listeners here today. I know that it's a membership site, and can you speak a little bit to some of the benefits that one might receive after becoming a member? I mean, the people that are listening to the show, are they a good fit for becoming a member of your website, or is it more geared towards those that run family offices?
We have over 1,500 family offices registered. For them, it does not cost anything to register. We qualify them. We get to know them. We meet with them in person at our office or their offices over time, et cetera. You can see them in our podcast or our books at our conferences. We also have 800 members globally who are paying members, and they're called charter members of the Family Office Club. And when you join as a charter member, you get to come to any and all of our 20 events per year. Half of those are investor summits, half are investor relations and how to raise capital type workshops. And then if you don't want to fly to London or Toronto or to Miami for one of our events, or San Francisco is too far, we live stream each event, and then we HD record each event as well. And so our membership really gets you access to the events, but also you get to log into the portal. And we've got over 300 investor interviews there. We also have a free CRM you get lifetime access to. And then we review your marketing materials for your investment firm every quarter and send you a 2 to 3 page report on potential changes that we would consider, making if we were in your shoes to help make those investment marketing materials more valuable. We've learned over time that once people get in there, they typically like the platform we've built and that value. So we have done 2 things. We've made it so it's a $1 to access for your first 6 days. And then on the 7th day, it goes to the normal $299 a month, but it's just a month to month. So if we're not producing the value, then all 800 members would be gone, but they're not gone. We have more members each month than we did the month before, but none of them are under a contract. So it puts the pressure on us to keep on hosting good events, recording more content, making that portal more valuable. And that's what's been kind of fueling the growth at the Family Office Club.
It's funny. I'm actually here looking at your website right now, Richard. I'm actually wondering why I'm not a member of it right now.
Me too.
I know we talked a few years ago. Dude,
we got to change that.
This isn't a marketing ploy for this show at all. Like, this is just me looking, saying, I mean, you've got all these events, and honestly, I could see myself attending at least 2 of these a year. And just in my mind, I go to a lot of events every year, a lot of industry events, and I easily drop $2,000 or $3,000 for each one of those events, and that doesn't count travel or food or hotel. And it seems like for just a annual price alone, I would get that and much, much more from your website. So
for sure. And importantly, it's a firm-wide membership. So if you join, someone on your team could complete our capital raising certification. Someone else could come to our capital raising Catalyst Bootcamp workshop that we have in 5 different cities per year. And then you could come to the more important investor networking summits if you felt most comfortable representing the brand at those events. So multiple people on the team can benefit from the one membership. You don't have to get 3 memberships if you want to have different people using parts of it.
Okay.
So it makes it easier. Yeah.
Fantastic. So, and folks, you guys can go over to familyoffices.com and learn more about what we're talking about here, about the membership, and read all the details and what you get for the monthly fee that Richard's. It's $2.99 a month.
Right. And just $1 to get started for the first week, basically.
Okay. Fantastic. Well, I know we're running out of time here, so I'd like to enter in what I like to call the golden nugget segment of the show, Richard. And this is where I'd like to ask you if you just had one last golden nugget of advice or wisdom that you could leave with our listeners today that may inspire and motivate them as they progress in their real estate investing career. What would that one last golden nugget be? It
would just be to integrate everything and have like a real high sense of integrity in everything that you do in your personal and business life. So who you add to the team, what your logo and branding looks like, what you say, what you focus your time on, who you spend your time with. And if all those things are integrated and pointing in the same direction, then you're going to have a ton of momentum, and it won't be painful friction within your team or within your business or between your personal life and your business life. The more integrated, then the more naturally you'll just make progress in the world, I think.
No, that's great advice. And I have to ask you, are there any books or resources that you feel offered a ton of value when you started building out familyoffices.com and all these different affiliate organizations that you subsequently built? I mean, you've been done a great job at branding yourself, branding your business, and keeping everything congruent. Are there any books out there that you would recommend to help folks start down that path?
Eben Pagan and Dan Sullivan have been big mentors to me. And Eben Pagan once recommended to me the Mastering the Rockefeller Habits book. The choke points concept in that book has been super helpful. And then just as a wise, source of advice as I'm growing the business, Dan Sullivan has been helpful. And he's got a book called the ABC Model, and he's got 20 other books and a book of quotes. And, his stuff is pure gold as well, I think.
Yeah, fantastic. Well, Richard, this has been a lot of fun. Really appreciate you coming back on the show and joining us here today. And folks, just to remind you can go visit Richard and his website and learn all about the resources and services that his company offers by visiting familyoffices.com. And Richard, that's all we have, my friend. I'll look forward to staying in touch with you. I'll actually look forward to meeting you in person at one of your conferences coming up. I'm going to go ahead and join your website here when we hang up. Awesome. And I'll look forward to meeting you in person sometime soon. So you take care. And until we talk again, just keep rocking, my friend, okay?
Great. Awesome. Thanks, Kevin.
Congratulations! Now you've got more of the best tricks of the trade in building massive amounts of passive income from real estate. For more amazing resources, visit realestateinvestingforcashflow.com. And we'll see you next Monday morning.